Welcome to another Mindful Bit. I'm your host, Corey Kelly, and today we're going to be talking about why interest rates are so important. And in particular, we're going to be taking a look at mortgage interest rates. I know home buying is really popular right now with COVID. Everyone's looking to buy a house, and here in Austin and Houston, Texas in particular, housing prices have skyrocketed. So this is just a little tip to keep in mind when thinking about purchasing that dream home or that forever home. So if you'll notice on the screen, I have the better.com portal pulled up, and this is a mortgage company, Better Lending, and they're offering me some rates. So what I've done is I've told them I want a 30-year fixed rate, purchase price of $500,000. I want to do a 10% down payment, and then they offer me these rates. So if this world is new to you, these rates won't necessarily make that much sense, right? You see 3.5, 3.6, 3.7, and you also see these points. What do the points mean? So we'll talk about the points. We'll talk about the interest rate. So what these mortgage lenders will do these days is they will allow you to pay them money up front in the form of points to qualify for a lower interest rate. So this means you're going to pay the lender $9,000, $9,104, and they're going to offer you a low monthly payment because of this low interest rate of 3.5%. On the opposite end of that spectrum, they'll pay you $4,946, but then offer you a 4.37 interest rate. So why would you choose one of these over the other? Why would you go with a 4.375 interest rate? This might be a really enticing option if you need money for your down payment, number one. So you would end up with $4,946 that you could apply towards the down payment and closing costs. And number two, if you were planning on selling this home within the first couple years, this might be a really smart option for you. So if you're thinking of staying in the home long term, you probably won't want to choose a 4.375 because that means for 30 years you're going to be paying $2,247 a month, as opposed to $2,000 a month if you pay $9,000 up front and end up with that 3.5. So then there's an entire gambit in between 3.625, 3.750, 3.8, all the way, like I said, up to 4.3. And notice this is only about a $200 difference each month from 3.5 to 4.3. So you might be thinking, well, that's not that big of a deal, right? That doesn't matter that much. But you have to remember, we're thinking about 30 years if you plan to keep the home and $500,000. So we're talking about an APR and an interest rate on a $500,000 total. So what I want to show you now is how these different interest rates can affect how much extra you pay a mortgage company over the course of 30 years. And we're going to generate a loan estimate to look at that. So Better has a really nice user interface that'll let you select which rates you want. You'll lock it in, and they'll generate the loan estimate for you. So here they are generating the estimate. Let's continue so we can take a look at the document. And what we're going to do is we're going to want to pull a very specific field from this document. And if you're not using Better and you have another lender, you can ask them for the loan estimate when you're initially getting estimates from companies. And please, I encourage you, go to more than one lender. Get an estimate and take that estimate around to other lenders. At least go to 3, 4, or 5 different lenders. You can find a really good rate and then ask the other lenders if they can match it. And really, these lending companies should be working for you in the long run. So what we're going to take a look at is, and once again, this is just a fake document. This isn't my actual home loan. We're going to scroll down to total interest percentage, TIP. This is a really cool figure because it's telling us that 61% of our total is going to be paid in interest over the course of our loan. So we know that our total is $500,000. Let's just see how much that is. We'll do 61% of 500,000. I'll just Google that. $305,000 you'll be paying extra on top of the $500,000 for this loan. That's $800,000 total you'll have paid when you pay off your house if you keep it for 30 years. Okay, that's a big number. That's a lot of money to go to a lender just for the sake of borrowing their money. That's free money to them. That's $305,000 free money. So you say, okay, Corey, that was with the lowest interest rate, which is kind of scary. Let's go up to that. Let's go to that high interest rate. Let's go to the 4.3 and see. So what we'll do is we'll scroll down here to the 4.375. Remember, they're going to pay you so that you choose this option. It's going to look enticing. We'll set this as our selection. It's going to double check our info and generate our loan estimate once again. And we're going to take that same value and compare how much we would have paid over the course of 30 years with this particular APR. So let's once again go down to that tip field. 79.925%. Okay. So let's just round that up to 80%. 80% of 500,000 is $400,000. $305,000. The difference between those two interest rates over the course of your loan is $95,000. So choosing an interest rate and selecting that interest rate is very important. Shopping around for a mortgage is very important. Shaving off just a few decimal points is saving you money. So don't go with the first lender, even if they're nice, even if they're polite. They'll understand. It's your right to shop around and really understand how these numbers can work in your favor. Have a goal, have a clear set path financially of what you need to achieve. Are you trying to get a low monthly payment? Are you not worried about a low monthly payment because you're going to be selling it in a year and you can handle the high mortgage rates? So there's a lot of options, but ideally, if you're planning to buy a home and stay in it for a long time, you want to have a nice low monthly interest rate so that in the future, if something happens to your job or you fall in hard times, you're not paying a huge amount of money each month. So keep that in mind. If this video is helpful to you, let me know and I'll make some more videos just like this, just kind of describing the home buying process and some tips and tricks that you can use as you go through the process of finding a lender and really being aware of the interest rate and how it's going to affect you and how much it'll cost you. So this has been another Mindful Bit with me, Corey, and I'll speak with you on the next one. Bye-bye.